stock of the day is Resmed, and shares of the California-based medical equipment company have taken a hit after quarterly earnings missed consensus estimates by about 5%. And as we can see, the shares are currently trading down about 10%. Resmed has announced a noteworthy 18% rise in revenue, amounting to US $4.2 billion for the entire financial year. CEO Mike Farrell revealed the company's intentions to introduce artificial intelligence products tailored for both patients and doctors. The net income for the full year stood at US $187 million, representing a 15% increase. So, gentlemen, Luke, how are you seeing these Resmed results? Of course, we did get that AI theme dropped into it, but nevertheless, the company has been tracking along in that direction for a while.
They have, yeah. I'll give them the benefit of the doubt, Danielle. They aren't one of the Johnny-come-latelys to the AI theme. They have been there for a while, but it is the buzzword, and I'm sure we'll see it a lot more in this reporting season. So funny enough, I just said that the outlook for the reporting season will be what companies are saying about the future, but this is just a good old-fashioned earnings miss. You have a look at what's happened to Resmed over the financial year, and I think what's got the market spooked and where analysts have sort of will have to sharpen their pencils and redo their numbers is particularly around the gross margin for the business. I had a quick look this morning because they report quarterly as a US-based business now. In the first quarter, their gross margin was 56.9%. It declined to 56.1% in the second quarter, 55.3% in the third quarter, and then the most recent one today, 55.0%. So you've seen a degradation in that gross margin almost linearly across that financial year. And of course, the effects of supply chain issues and all the things that have impacted gross margins for businesses and particularly manufacturers over the last couple of years. You would probably think we're getting to the back end of those effects now, or in particular, companies that are still seeing those headwinds. We're well into an inflationary cycle where price rises have been passed on by a vast majority of businesses. So I think the market's right to sort of question Resmed here and say, maybe your gross margin starting to fall at the start of the year is a bit of concern, but what's taken you so long to either pass through those price rises, or are you able to, is a very, pertinent question to ask, but also, get a better handle over your cost base and the inputs that go into it. So when you combine that with still 35 times earnings, there's just not a lot of headroom for that little misstep that's obviously come through. I think as a business, the outlook is still, quite good. Top line revenue growth was still 23%, still really strong. But the market reaction to me is actually quite rational, and I think it's worth people who own Resmed just taking a look at that gross margin and thinking to themselves, can this get back to the 56, 57%? Because even that 1 to 2% percentage points, is quite a big hit to the bottom line with a revenue base like Resmed's. So look, given I've only had a quick look today, I would say a hold for people, but just be aware that valuation is high. And you need that turnaround or that execution to come back pretty quickly to support that. So this could be a little bit like CSL, which we'll talk about later, where it may just drift downwards for a while. So I will say a hold, but for people to look a bit deeper into this result, I think there's more to it than just an earnings miss.
Yeah, indeed. And if my memory serves me correctly, they've actually had a miss for the last few quarters and traded down afterwards. Claude, how are you reading the results?
Well, I'm happy. This is why I love being on with Luke, because he can get into the details. So I think the best way I can add a little value is if we take a zoomed out view of this. Now, on the zoomed out view, the one point that is important with what Luke was saying is the margins coming down. That can be indicative of a number of different things, but generally speaking, you see that happen more when there is healthy competition, because that does restrain the ability for a company to just pass on any cost increases plus extra. So I would look at the competitive positioning. It seems like, I don't know if, I think that some of Resmed's competitors are pretty solid as well. So it is one risk on a zoomed out level is this is not a business that I would say is necessarily improving its position year after year, which is probably the holy grail of quality bro investing. And so it probably it starts falling out of that thesis, but it's still a good quality blue chip healthcare investment. So that is the big picture part that's still working for it on a gross profit level, despite the gross margins coming down, you're still getting over 10% growth, solidly over 10% growth. In EPS, similarly, 14, I think, or a decent percent growth on that as well. So this is a company that is still growing, and probably high hypergrowth is not going to be possible at this kind of scale anymore. So I'd never really expect to see that, maybe sometime with an acquisition or something, but it's unlikely. Mostly the edge here is this is a company that one would argue can just keep growing for a really, really long time. And at mid-30s P ratio, I reach at using broad strokes in a zoomed out view, probably the same conclusion as Luke. I mean, I would say the main blue chip, slightly defensive long-term growth at a reasonable price thesis still probably does hold here. So it's not something you need to be selling. Having said that, it is a hold for me just because I'd prefer have a little more. I think some of the risks is skewed to the downside just because of that other factor where it probably the quality of this company's positioning is no longer improving. And what you really want if you're focused on quality growth kind of style investing is you want companies that are improving their quality, which often comes through in margins and usually a better competitive positioning over time. And given that we're probably not seeing that here, that's what keeps it in a hold zone for me.
Fantastic, Claude. Okay.